Hey guys, so I get the question a lot. What's going on in the real estate market? And is it a good time to buy a home right now? So let's look at what's happening in the real estate market. If you owned a home in July 2020, your home appreciation was about 19%. And that's according to the statistics that we got from Federal Housing Finance Agency, CoreLogic Home Price Insights report, where they recorded 18% appreciation, and the National Home Price Index. And in this slide, we see that nationwide, on average, price appreciation year over year in quarter two nationwide was on average 17.4%. And we look at Minnesota, where homes appreciated 14.9% year over year, and my cousin state Florida appreciated about 18.9% year over year. And all the states in the red, their yearly appreciation was at least 20%. Note that Idaho tops the chart at 37.1%. Experts are predicting that trend is expected to decelerate. And just to be clear, they're not saying that we should expect depreciation, but we can expect a deceleration in appreciation. This slide shows this expected appreciation performance year over year, where homes have shown an 11.74% increase thus far in 2021. Next year, experts predict a 5.82% appreciation and a 3.94% the year after that, then settling a little above the pre-pandemic national average around 3.5%. With experts predicting that the closings are looking to decline about 10% year over year in the second half of 2021, it brings us to ask the question, what are we going to expect in the fourth quarter? Fall is usually the start of the slower season for the housing market. Nothing is usual in today's pandemic-driven housing market. Potential home buyers are seeing a slight rise in inventory and consequently rushing back into the fray. Mortgage applications to purchase a home jumped 7% last week from the previous week. That's the highest level since April of this year. So it's difficult to truly say where the future of home sales will go, but looking back at home sales, we know that 2019 was a very strong year for home sales. And that's the blue line. Then the pandemic came and disturbed sales, nicely putting it, and in July, sales continued even stronger than the highest of 2019 July. Then we see sales ended stronger, closing out in 2020. Then starting out 2021, home sales declined, barely keeping up with 2020 sales, but in reality we are doing better than 2019, which was a spectacular year for home sales. So where do we go from here? Again, it's very difficult to judge, and here's another reason how you can see that we still haven't settled into pre-pandemic norms. If we look at it on a month-to-month basis and graph out which month did the national average of active homes on the market peak, we see that 2017 active available properties peaked in August, in 2018, October, and in 2019, September. And with this data, 2019, we could have said it's safe to predict that 2020 active homes will peak late summer sometime possibly. What happened in actuality? Active listings peaked in April of 2020, 5 months before the previous year. But not only did listing supply begin a downward decline, sales for the second half of 2020 increased to the point it really helped keep up the trend of shrinking housing supply. So I personally can't give you a clear answer as to when we're going to peak in 2021 with housing supply, but we can go off a few indicators that we're seeing. Slowly, albeit more listings are coming to the market from sellers that may have held out on selling. We've got new construction hitting our cities and towns, with new options for sellers that may have found it difficult to find their new home after they sold their current home. And also the end of forbearance for a lot of people. Instead of going into foreclosure, a lot may have the option to sell and cover the expenses of the sale from all of the equity that they may have gained. So I will keep you guys posted on what's going on with supply, and as demand goes, let's talk about rates. Experts and professionals all agree that rates are a big risk to house prices, but a drop or flattening in house prices is a far cry from what we saw during the Great Recession, according to Ali Wolf, the chief economist at Zonda. Since January of 2020, rates have been mostly under 3.5%, dipping to below 3% for a healthy portion of time, until recently rates ticked up out of the 3% range, in which could be due to the Fed's communicating that it will taper its support to capital markets. While mortgage rates aren't guaranteed to soar once the Fed tapers and the 10-year Treasury yield increases, but some experts are saying that Americans might want to prepare for a modest increase as the Fed starts to ease away from their easy money policies. While according to Bankrate.com, 63% of the economic experts they surveyed believe that the Fed will leave the rate alone for the next year. Let's take a look at what an increase on the rates does to your buying power. For example, if you were to buy a home today and you could get a rate of a 2.75%, and the max you could afford was a $1,633 payment, then you will qualify for a $400,000 loan or $400,000 worth of house. Okay? Now let's say a year from now you decide to push off your home purchase and it wound up being 2 years before you actually bought a home. And let's say when you bought, the rates rose up to 4%, which is still historically low. Well, let's say then the same maximum $1,633 maximum qualifying payment that your lender approved you for, you will only be able to afford a $340,000 loan, which is $340,000 worth of home. And with home ownership being one of the biggest ways to accumulate wealth in America, when I get asked the question, is it a good time to buy a home or an investment property right now, I like to refer to the potential growth of household wealth over the next 5 to 10 years that a person can possibly inherit by purchasing a property. If we look at this graph, according to home price expectation surveys in 2021, if we applied their projected appreciations onto the same $350,000 home, we can see that in 5 years, a person could potentially gain $111,285 in equity, based solely on projections and not including your pay down and any other improvements that you may have done to the property. And that could be a game changer for most when it comes to building wealth. And guys, if you like this video, please like, subscribe, and share it to somebody that you may think can benefit from this video. And if you or somebody you know that's looking to buy, sell, or invest into real estate, please pass along my information and let them know that you do know a real estate agent. Thanks for watching.